This is the chart of your USD with no drawings or analysis on it. And this is the same chart with drawings using market structure concepts. The chart now looks clear, reliable, and less complex. Today, we're going to learn how to read the structure of the market the right way using market structure concepts. This course is for both beginners and also for advanced traders. Here's a quick overview of what we're going to learn in this course. I'll also show you an indicator that plots all these drawings automatically for you in real time with no effort. So without further ado, let's get started. Welcome to the Ultimate Market Structure course. Let's start with the concept of trend. A trend represents the general direction in which the price moves over a period of time. It can be an uptrend, also called a bullish trend, which occurs when the price continuously moves upwards, or a downtrend, also known as bearish trend, occurs when the price continuously moves downwards, or a sideways trend occurs when the price moves within a relatively narrow range without displaying any clear upward or downward direction, consolidating in a particular area. When you look at any chart, you will observe the market in one of these three phases: highs and lows. When the market is in an uptrend, the price doesn't go up in a straight line. Instead, the market creates highs and lows while moving upwards. In an uptrend, each low form is higher than the previous low, thus called a higher low. Similarly, each high is higher than the previous high, hence referred to as a higher high. On the other hand, in a downtrend, each high formed is lower than the previous high, and each low formed is lower than the previous low. So we call them lower highs and lower lows. Break of structure, or BOS. In an uptrend, a break of structure occurs when the price breaks above the previous high. Here you can observe that each higher high is formed by breaking the previous high. Similarly, in a downtrend, a break of structure occurs when the price breaks below the previous low. For each lower low to form, the price has to break the previous low and move downwards. Change of character, or charge. In an uptrend, a change of character refers to the change of the trend to a bearish market. This occurs when the price breaks the latest higher low. A charge indicates a strong reversal, which means the market is about to be bearish from this point. In the same way, in a bearish market, a charge is formed when the price breaks above the previous lower high, indicating a bullish market from this point. Nested highs and lows. We mentioned that in a trending market, the price creates highs and lows. Now, if you take a single move in this trend and zoom in, we can see that the highs and lows are repeating in the lower time frame as well. Here, you can see the market goes through an uptrend. Then a change of character is formed, followed by a downtrend. This phenomenon of finding the highs and lows in a lower time frame is called nested highs and lows. Points in the lower time frame are called minor highs and lows, and the points in the higher time frames are called major highs and lows. Order block. Order blocks are basically support and resistance area on the chart. Instead of using lines to represent support and resistance, traders use rectangle blocks known as order blocks. The primary reason for using rectangle blocks is that the line cannot indicate precisely where the price is likely to bounce back. By using a block, traders have more flexibility and can anticipate the price bouncing back anywhere inside the block. Order blocks are classified into two types: bullish and bearish order blocks. A bullish order block acts as a support for coming bearish move, causing a bounce back and pushing the price to the upside. Conversely, a bearish order block acts as resistance for a bullish move, leading to a reversal to the downside. Traders often use the top of the order blocks as an entry point and set the stop loss at the bottom of the order block to utilize the upcoming bullish move. Now, let's discuss how to draw an order block. Take a look at this chart. This point right here is obviously a resistance level. To draw the order block, select the rectangle tool, start drawing from the low of the bottom candle to the high of the candle. Then extend this block. Different traders use various methods to draw order blocks, and this is one way to do it. Now let's implement all the concepts we discussed and learn how to identify highs and lows in the chart. Here, let's assume the market is going to be bullish from this point. That means this is going to be the lowest point. Let's mark it as the low. Next, we need to find the high. Here we can see a high, but we are not sure if that's the next high yet, because to confirm a point, we need to find the next possible point. Meaning, in our case, we need to find the next possible low to confirm this high. A possible point means the point is not confirmed and it can change anytime. Now let's see how to find the possible low. We have two rules to find possible low. Rule number 1. Wait for two candles to form above the previous candle's low. In our case, this candle can be the possible low since two candles after this candle are now breaking this low. Rule number 2. There should be at least 4 candles between a high and a low. In our case, we have a total of 6 candles between this high and this low. Both rules are satisfying in our case, so we can say this is the next possible low. Since we found out the low, we can confirm the previous high. Now to confirm this low, we need to find the next possible high. Remember, the next high in an uptrend will be above the previous high, so called as higher high. As we expected, the price breaks above the previous high. As we learned, this is called a breakout structure or BOS. Once the price breaks above the high, we can look for the next possible high. The rules for finding the possible high are the same as finding the possible low. The only difference is the rule 1 is inverted. Wait for 2 candles to form below the previous candle high, just like we see here. These 2 candles are below this candle's high. Rule number 2 remains the same, which is there should be at least 4 candles between the high and the low. That means we can mark this as the next possible high. Since we found out the next possible high, we can confirm this low. Next, we need a low. This candle can be taken as the next possible low since rule 1 and rule 2 are satisfied. These 2 candles are above the previous candle low, and there are at least 4 candles between the previous high and this point. So let's mark it as a possible low and confirm the previous high. Now here is a tricky part. The price breaks below the possible low. That means this cannot be the next low anymore. This is why we call it a possible point, because it can change anytime. So now, according to our 2 rules, this is the next possible low. But that low has been broken again and formed another possible low. We can't be sure if this is going to be the low until the price breaks the previous high. Let's see if that happens. The price breaks the previous high, forming a BOS. According to our 2 rules, this could be the next possible high. So now we can confirm this low. Let's run the chart. Here the price broke above this possible high. So now this will be our next possible high. Here we got the possible low. So let's confirm the previous high. Let's wait for a price to break the previous high. There we go. Now let's see if we can find the possible high. There we have it. So now we can confirm the previous low. Our next step is to find the next possible low. Here we got the low, meaning we can confirm the high now. As the price moves, you can see that the price is breaking that possible low and we are changing the low multiple times. Here the price almost breaks the previous high, but it came down again. But interestingly, the price breaks the previous confirmed low. As we learned earlier in the video, this is called change of character or charts. That means we assume the market is going to be bearish from this point. Before we go any further, let's connect the highs and lows with the line tool. Now the chart looks more readable. Let's assume this high is the start of the downtrend, which means we need to find the possible low next. In the bearish market, we are using the same rules as before, but inverted. Let's play the chart and try to find the next low. Here we can see the possible low by satisfying both the rules, meaning there are 2 candles above this low and there are more than 4 candles between this high and this low. Here we have a possible high with both the conditions being true. That means we can confirm this low. Now it's time to find the next possible low below this low so that we can confirm this high. Here we go, we got the possible low. So we can confirm this high. I'm going to fast forward the rest of the steps because we are just repeating the same steps again. I hope you understood the concepts and rules clearly. Now at this point you can see that we have a chart when the price broke above the previous lower high. Now if you don't want to put effort and time into finding highs and lows on the chart, you can use this indicator called highs and lows ultimate. All you need to do is apply this indicator to the chart with a single click. Everything we want is automatically plotted on the chart in a fraction of seconds. This indicator automatically draws highs, lows, order blocks, breakout structure, and change of character on the chart. All the highs and lows plotted are exactly the same as we marked. On top of that, you can use this indicator in the live market as all highs and lows are plotted on the chart real time. This indicator even has an order block, chart, and POS alerts. You can import multiple instances of the same indicator and apply it in different time frames, creating these nested highs and lows. You can access this indicator by visiting bullishminds.net or clicking the link in the description. If you want to know more about the highs and lows indicator, check out this video right here. Click before the timer runs out.